Hello traders and welcome to another video review. Today is Tuesday the 6th of the April 2021. Let's take a look at the Forex calendar after the Easter holidays are done. What do we have here today is kind of important. We got market services data, the PMI data from China, services and composite released overnight. As you can see, all of them beat the expectations. Actual reading was 54 points. 54.3, while the forecast was 52.2 and the previous reading was 51.5. Very good reading, beating the expectations. And the other one was the composite was 53.1, forecast 52.8, previous reading 51.7, beating the expectations as well. So nice data from China, kind of important data from the Reserve Bank of the Australia. Interest rate decision has been kept unchanged at the level of 0.10%. So we will take a look definitely on the Australian and New Zealand dollar today. Some data from the labor market during the London session are scheduled for release from various European countries, Spain, Italy, and the other countries. We got central investor confidence data and unemployment rate scheduled for release at 9:30 and 10 o'clock respectively, both from the Eurozone. As you can see, the unemployment rate is expected to stay at the same level, 0.1%. And during the New York session, not many data are being scheduled for the release. As you can see, we got not really important data during the New York session, so we will not take a look at this. But what I would like to analyze is of course the Australian dollar. Let's just go to the daily time frame chart of the Australian dollar, and as you can see, our scenario of the head and shoulder formation after the rally started in the beginning of the November last year had been spot on. We got the left shoulder done, head done, and the shoulder done with this level of 7,122 pips as a top level. For the shoulder, we have a breakout below the neckline. We have the neckline test. We have a dip below the left shoulder low at the 7,564. This is done already. Kind of a pin bar here, kind of a hammer candlestick done here, but we still trade below the neckline on the Australian dollar. So the decision of the RBA to keep the interest rate intact at the level of 0.10% didn't actually trigger any move on the Australian dollar, neither up nor down. But as you can see, we are still trading below this neckline. So right now, I suppose this move to the downside will be continued with the target of the first one, lows of the left shoulder, 7,564. It shouldn't be strong support. It should be broken very, very easily. Next target, 7,464, and the ultimate target at 7,410 pips. This is marked with my blue arrow. So please pay attention to the current development on the Australian dollar. We might resume the downtrend and fulfill the head and shoulders pattern soon. New Zealand dollar, what is going on here? As you can see, those head and shoulders pattern was not that like a textbook example, but anyway, we are still trading lower. We have hit our level already at 6,941. We have a double bottom and some sort of a bounce. So the last wave down, as you can see, was that wave. That wave here from that top to that low was the last wave down. Let's see how much we have retraced already. So we got this top, we got this bottom, and we know that we didn't even retrace 38%. So let's just try the last wave. the really last wave, and as you can see, we have retraced 38% of this last push down. 38% is located at the level of 7,065 pips, and it looks like we have a bearish engulfing candlestick pattern right at the 38% of the Fibonacci retracement, and below this technical resistance at 7,097 pips. So the bears are still in control of this market, of the New Zealand dollar market. So people are selling New Zealand dollar and buying US dollar. As you can see, we are trading below this blue short-term trend line resistance as well. So please keep an eye on this line as well. If we will not break higher, it doesn't look like we will, because of this building bearish engulfing pattern here on the daily time frame chart as well. So the next target, lows of the 6,941, and then if there is a breakout for this week, the next target is 6,786, or even lower towards 6,753. So please keep an eye on the New Zealand dollar. We are still trending lower. Let's see if we have some sort of a channel here. Maybe we have. Well, almost, right? So this is like a bearish channel right now. We are still trending lower. We are still inside of this channel. New Zealand is being sold. American dollar is being bought back up. So Chinese data might have some influence on the spot gold market. So let's take a look on this market. As you can see, we've made a double bottom around a level of 61% of the Fibonacci retracement of the last wave up, 1,689. We have a bounce back up above this short-term trend line. Not much happening here. We are still trading in the side. I mean, we are back trading inside of this narrow zone between $1,720, $1,755. Of course, the key technical resistance is still the level of $1,760 and $60. So the price, despite the fact that we are trading above the short-term trend line, the price is still trapped in this narrow consolidation, and as you can see, and the momentum is roughly neutral. So there is no real direction on the gold right now, neither up nor down. We are trading here inside of this consolidation. Is also no visible trend in the short term, but the larger time frame trend is still down on gold. So please keep an eye on a breakout below 1,720. This is the technical support, of course, and 1,755.60. This is the key zone, the key levels that prevent the bulls to rally higher towards 1,848, because this is the ultimate target for the bulls if they manage to break out above this zone here that I've just mentioned. So if we talk about gold, let's talk about silver. Spot silver market, very similar situation to gold market. We have this blue short-term trend line here. As you can see, we hit it once, second time, third time, almost hit it for the fourth time, and I think that this is some sort of pin bar candlestick. It's not closed yet. But it looks like a pin bar candlestick, and if it is, that means we are back towards 2348. This is our target for the next for this week and for the next week. Technical support 23.74, and the lows of the 5th of the April. This low is 24 and 56. So this is the low this is immediate low for the bulls. As long as we trade below this blue trend line, the downtrend is still intact, and only a valid breakout above apparently the level of 25.38. That's the level here. I will just put a line. Breakout above 25.33, 34 is a trigger breakout that might result in a rally towards 26.58. As long as we trade below this level, no chance for the bullish rally on silver. We will likely consolidate under the blue trend line or reverse lower towards 23.78 or 23.48 on silver. So that's my analysis of the precious metals market and the Australian dollar and the New Zealand dollar. That's everything for me. I hope it helps, guys, and I hope I see you tomorrow with a new fresh analysis. So take care and bye bye.